Okay, good morning, K2 members, and those of you who are in the community but are not member yet. This is an update for you with regards to the current market upheaval, right? We have got 2 days of selling. Let us just go through the charts quickly to let you know where are we right now. Okay, oops, sorry. So you can see this index chart on S&P 500, the ETF. So usually we can use this chart to gauge the direction of the market. There was a big gap over here, as you can see, between 545 to this level 548. So in technical analysis, right, guys, when the price is falling, this gap usually act as a support. Okay, so we are expecting there's a confluence of support over here, so we're expecting this level to hold as a support technically, but it can also break it. Like, support is not a magic bullet that wow, prices go there, it will rebound. It doesn't work this way. Okay, especially if you have got a number of bearish reasons for the market to crack their support. To use this support, you will need to combine with the catalyst, like how likely it will be supported. If there is an upcoming news event that is supposed to be bullish, then the support likely to be supported. So when you are trading the support, you can use this information and watch out for the price action. If price action is bearish, then you know it's not going to work. It will crack the support and you look forward to short the market. So that is how a trader interpret the information together with the chart. Also, I find that a lot of beginner trader, they usually follow the books and they ignore the fundamentals part, the catalyst parts, and just buy at support, short when support break blindly. That is how I personally lose money in my early years. So right now, older, wiser, we use the catalyst to confirm and watch out for price action. But of course, you are using robot, then this one doesn't matter lah. We let the robot handle. But just to update you, we are up for quite a number of weeks into September, and you have got a resistance right here. Okay, at the all-time high in S&P 500 in August. So it is not looking good. There is a good chance that we may be looking at lower prices first before we rally into the election in November for US. Okay, so this is the current market situation right now. We are looking at weakness. The yesterday's data. Oh yeah, okay. Yesterday night, last night, we didn't have another continuous sell down, but it doesn't mean that the storm is over. Okay, if you can see, even in August, after falling for 3 days, there were 2 days of bounces before the market go another leg lower and then bounce a few days and go lower. So this is how the market moves down. Okay, there will be short-term bounces that we call the dead cat bounce along the way. So you don't want to see, in effect, right, guys, you don't want to see lower high, lower lows developing over here on the right-hand side. Also, that in itself tells you that the market direction is downwards bias. Okay, so that is for SPY, and let us address this important week. Okay, this important week. Okay, before we talk about important week, we talk about the fear and greed index. So you can see this fear and greed index that we developed. We have got a lot of room for downside, guys. Okay, so the year low, okay, now say year low. But if you take a look at the May low, it is at about 28 percentile level. Okay, and the August sell-off also held at that level. So if the September sell-off comes along together with the October, if this level hold, that is where the market may potentially reverse. Otherwise, the worst case scenario is how the market fell in April this year, go to the 6th percentile. Okay, so these are the 2 levels to watch. So we are around here. So the best time to buy is actually when the index starts to reverse right here. Okay, the immediate level that we'll be watching for. Okay, so that is how we use this information. And the catalyst for this week. Okay, this week, last night, we have the jobs openings. Okay, let me go through the economic data together with you. Job openings. So you can take a look at the data over here. Isn't very pretty. We are at the lowest level since 2021 May. Okay, it keep on declining. That means job openings are at one of the lowest in recent time. Okay, so it is not good because lesser job openings. But if it is supported with another narrative, okay, for lower job openings could be the labor market is fully employed. Okay, so that could be a reason why job openings getting lesser. But is that the case? How do we know? You go down and take a look at the upcoming Friday data. Okay, Friday is an important night. Okay, but before that, Thursday, the job data, you can see it's coming down lower and lower and lower. So it's not good, right? So if it is fully employment, then it should not see a higher unemployment rate. Okay, so what we are looking at in terms of unemployment rate is it is ticking up in 2024, and a lot of S&P 500 companies has reported a weaker guidance for the next quarter. Okay, so these are all pointing down to a weaker employment market. That is not good. That is not good. Okay, why is it not good? Because if the non-farm payroll number continue to dip lower on Friday night reports, if it dip lower, then it is a very strong bearish catalyst to break this support level. Prices are going to come down, stocks are going to come down. Seasonally, it is going to be a weak September because of this reason. Okay, so it's a big watch out on Friday. So from today to Friday, which is tomorrow, try to go light, don't hold too many stocks in case most likely it's going to be bad lah. Oh. Okay, the other thing okay, about maximum employment, right? You can take a look at the GDP, GDP. So if the GDP remains strong and firm, where's my GDP? Okay, so Thursday night, we still have one unemployment claims data. So if this number still remains strong and firm, then perhaps tonight is a non-event. But if it close, if the number reported is significantly lower than last reported month, right, then prepare for a tough time ahead. Okay. Now, when I say all these bearish news, right, it's just to prepare you, to let you know that hey, there is a potential bearish catalyst happening on Friday, and especially this week, where the S&P 500 can reverse and then starts on the downtrend. Also, this is to prepare you and let you know what's going to happen, and yeah, so that you are not caught off guard lah. Okay, so that you're not caught off guard. So keep what do you call that? GDP number. Okay, so GDP number, if it report lower, I'm all talking about US, not Singapore, not Malaysia. So if the GDP number also goes lower, estimate is also being lower. Usually all this shit, bad news all happen together, cluster together to crash and bring down the index, and then it will be priced in. Okay, that means all the jobs, poor jobs data, poor economy information, all coming in, bring the index low. Okay, crash the index. Okay, another 5-10% lower. Then it is considered priced in already, the fear of recession. So once it's priced in, September rate cut will come in. So with every rate cut, there is hopes that the Fed will be able to reverse the situation. Then from then on, all the jobs data, economy data will be scrutinized. We are no longer looking at inflation. Now we are looking at fear of recession. So those data comes in, if it remains stable, the market will think that the rate cut is effective. So the stock price will slowly start to dance its way up. That is how the market mechanics work, for those of you who are not aware. So to close this off, to summarize, this week, Friday, important. The data itself will tell us if the job market is weak, then fear of recession will bring S&P 500 down to its knees first. Then we go ahead and wait for the Fed cut. Okay, so that is how it is. So any question, just feel free to leave at the comment section, and then we'll see if another video is suffice to explain in more details for you. Okay, so with that, thank you very much for listening. See you in the next video.